Hey guys, it's Chris Wong. I'm filming this video as of February 7th, 2026, and I'd like to talk about purchases I made while dealing with margin calls in the last few days. So as a disclaimer, I'm not a financial advisor. I'm just a guy who's interested in trying to build a portfolio and trying to achieve financial independence, retire early. So even margin calls were stressful, but I also want to try to take advantage of opportunities. I didn't want to wait for my buying power to come back up and then start buying on margin or start buying different accounts. So I did my best, like when I was switching some of the USD ETFs to the Canadian ETFs, like when I sold QQQY to get my buying power back. And luckily when I sold it, I actually sold it around $23.20 before it dropped down to about $22.50 when the market went down. And I was buying BIGY.to and even some shares of HHIS just to get more Canadian income. I was also trying to buy more shares of HBTE in my margin account and even my joint account. And I also tried to get more shares of QDay when it was under $24.50. I think I got it around like $24. And it was probably one of the only opportunities for me to buy more shares of QDay as I was averaging down. And I wasn't going to buy QDay a couple months ago when it was $28. So what I did to try to average down my positions, not knowing when the lowest point of a market correction or any drop in crypto, Bitcoin, or even a mild drop in the NASDAQ, it's hard to predict. And I'm not making recommendations for people to do this. I just did this more for myself, and I got to deal with the consequences if the market goes down even further. So for like HHIS, if I was able to even get like 10 shares at less than $11 a share, it was worth it for me. Same with BIGY.to. If I was able to get it around $20 instead of $22, and even if it was just like 5 shares, then it was worth it for me. And with like the Bitcoin type ETFs like HBTE, I started buying when it was less than $16. But I didn't know it was going to drop down to $12. But I also didn't want to spend $25 as all-time highs. So I just started buying at $16 and just started averaging down slowly, the best I could. So even before I started investing with margin, I still want to try to get at the lowest price possible. But most of the times, it didn't happen. But for long-term investing, I just still end up buying, regardless of what the price is. But with margin investing, I have to be more strict about trying to get at lower prices if I plan to use a lot of margin. So in the future, when my margin is paid down to like a safe level, or my equity is, let's say, reaches around 70% of total assets, then I would feel comfortable to handle market corrections. I still won't be able to predict if 70% equity relative to total assets can it handle a huge market drop without margin call. I don't know. It's just something I have to experience later in life. I hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.